Hi, this is Scott Davis, head of ETFs at Capital Group, and this is Taking Stock.
Let's do it, folks. It may have been a down day on Wall Street, but quite the reversal and a huge rebound. But don't call it a comeback here on Wall Street for this Friday. What's the date? November 21st. The S&P 500, after selling off in yesterday's session, down 1.5%. Now expected here for the tail of the tape to finish in positive territory, 0.9%, and that is the comparable story for market participants across the major market indexes. Technology shares led losses to the downside yesterday. Now they are gaining steam a little bit more into the afternoon session, and a bit of optimism, I would argue, for investors in the indexes. This after New York Fed President John Williams said earlier today he sees room to lower rates, quote, in the near term. Market participants interpreting that near-term timeline to be the December FOMC. And now we are seeing the odds of a short-term interest rate cut for that December FOMC meeting spike up to 70%. It's also options expiration day here at the big board. We usually see a nice surge of volume, sometimes a bit of volatility into the close. We will have to wait and see, with seconds left in the trading day and the trading week, exactly what investors have in store. 5 of the 7 Mag 7 stocks in positive territory, with NVIDIA and Microsoft down fractionally. 26 of the 30 Dow components up as well. Airlines, healthcare, and biotech, and autos all up on the day. Deaf Kids Code here at the New York Stock Exchange, set now to do the honors to wrap up a wild day and a wild week here on Wall Street. Time now for the iconic closing bell. And an amazing closing bell ceremony here from Deaf Kids Code at the New York Stock Exchange to wrap up, as we said right before the bell, a truly wild week of on Wall Street. The final tail of the tape for this Friday, November 21st, the S&P 500 up just about 1%. The Dow 30 up comparably. The New York Stock Exchange Composite Index up 1.2. And the small caps really getting in on the rally here on this Friday, up 2.8%. Let's bring in our first guest for the broadcast. Please say hello to Kyle Houtman. He is chairman at NCUA, my kickoff broadcast guest here for Taking Stock. Welcome to the Stock Exchange. Welcome to the show.
Good to see you, buddy. Thanks for having me.
Can you start first and foremost, give us an introduction to your work at NCUA for anyone a bit unfamiliar?
Yeah, I'm a government appointee appointed by President Trump a few years back in the end of his first term, and NCUA is like the little sister to FDIC. We insure America's 4,000 credit unions and are a regulator for them. Kind of like FDIC, but for credit unions.
What are you seeing, and how do you position yourselves against the backdrop of these broader markets right now?
Well, what they care about is rates. They're very Main Street. Mortgages and car loans are 85%. That's what they do, very Main Street. So you see today, rates tick down. You saw the comments from the Fed. You see the odds of a Fed rate cut. Very, very rate focused, and I think that's part of the uplift in the stock market. It looks like today was a happy ending to a week that was a sad movie.
Yeah, absolutely. And part of that sad movie was earnings, even though like a name like NVIDIA did report for the most part very good, and they gave us good guidance for the look ahead. It clearly was not enough for investors in yesterday's session. How do you approach, and how are you thinking about broader volatility, especially for a day like yesterday where the S&P 500 swung more than 3.5% peak to trough?
Well, AI is obviously another gold rush. And the question is, when is there gold, how much, and when is it going to be? NVIDIA is basically the people who sold the shovels and the picks in the gold rush. And there are real money, real profits to be made in that. I think the question for the broader economy is, when does the rest kick in? We know the people selling the shovels in the gold rush are making money. That's NVIDIA, that's the chips. But when does AI kick in for real earnings and real benefits to the rest of the economy before the inevitable job losses? Like, I'm old enough to remember the first dot-com boom, and it took a while. The market had a big tank before the real benefits arrived.
I wonder how you're thinking about government data. For a central bank that likes to call itself data dependent, we have the longest federal government shutdown in history. Government-based data has been tough to come by. We finally got some jobs print yesterday. What are your expectations, and how do you approach what is usually pretty reliable information that's a little tough to come by in this ecosystem?
Yeah, absolutely. It is a dark spot. Government shutdowns, and I've been through a few in DC, do focus the mind on private data out there. ADP payroll, sales numbers, refinancings, that kind of thing. You see a lot of refinancing going on in the mortgage market. But it is a dark spot. You'd rather have more data. I don't envy the decision of the Fed. But today's rally, I think it was in part because yesterday we were at 40% chance of a rate cut next month by the Fed. And I think we're finishing today about 70, 75%. I looked at next Christmas, December. Nothing has really changed. 2 or 3 cuts by a year from now, right? What has happened today is they seem to have moved up December, January, February. That's what's happened.
Oh, so potential interest rate cuts for 2026 moved up on the timeline. Is
yep.
What
If you look ahead to next Christmas, 2026, no real change. But when those 2 or 3 cuts happen, has seemed to be coming a little ahead of schedule. Some softening. You saw some weak consumer sentiment today.
Before I let you go, talk to me about your role in the Genius Act and the general stablecoin conversation, which is picking up a lot of steam in the hallways of Capitol Hill.
You bet. I think it's a game changer. You know, this country is very advanced. We have 18 or 20 biggest internet companies, but on payments, it's a little weird. We can't settle on Sunday. How many business days till you get it? We're a little creaky when it comes to payments. Stablecoins, so Congress has ordered me and a handful of other people in D.C. July to finish the rulemaking for stablecoins. What regular people need to know is that it's going to speed up payments, make all 7 days of the week equal when it comes to payments. You can settle on Christmas morning, and they're going to be dollar buying and treasury buying machines. Keep the U.S. dollar, its global status we've had since World War II, and in the long run, lower interest rates as they buy millions and billions of treasuries.
Kyle Hopman is the chairman at the NCUA, making his debut here on Taking Stock. It's great to have you at the New York Stock Exchange. Thanks for kicking off the broadcast with us. Jeremy, grab your mic. Todd, my man, you and I are going to go for a walk. Look at us, Todd. Look at our walk down Broadway. There's no crowd today. I got a clean walk. All right, usually we bring you the Polymarket odds, but I wanted to do something a little different today. A little bit of trivia here. Do you know the top performing names so far year to date in the Dow 30? Some of them may surprise you. Coming in number 5 right now with 26 days after today left in the trading year. Number 5 is Goldman Sachs, which is up 34% year to date. Number 4, NVIDIA after today's session, up 35%. IBM up 36%. Johnson & the second best performer in the Dow, up 41%. And how about Caterpillar? Yes, that Caterpillar, the strongest performing name in the Dow so far this year, up 51%. So far, as of today's close, 13 out of 30 components in the Dow are outperforming the broader S&P 500. The leading losses, UNH, Salesforce, and Nike, which is down 17% from the start of 2025. Todd, we'll take a look here at 2 NYSE notables, and man, oh man, are they ever. We got to start with a look at Eli Lilly, the first pharma company in history to reach a $1 trillion market cap. The stock is up almost 70% from August 8th. The company's seen very strong sales for several of its weight loss products like Mounjaro and Zepbound. The stock trading right at all-time highs today. It is only the second non-tech company in history to reach a $1 trillion market cap. The first, of course, being Warren Buffett's Berkshire Hathaway. Finally, let's take a look here at shares of D.R. Horton. It was a huge day for the home builders across the board as we saw the 10-year Treasury yield fall to its lowest level since October 29th. D.R. Horton, one of the best performers in the S&P today, and the odds of an entry for December are rising, and we saw it give it a boost to the home builders as well. Lennar, Pulte Group, and Toll Brothers all up on the session as well. This was D.R. Horton's best session here on Wall Street since July. Shares of DHI are up 4% since the start of 2025. We now bring you the latest from Cityscape Global in Riyadh, Saudi Arabia, which is an amazing conference we've been bringing you exclusive interviews for all week. Take a look.
I'm joined by Khalid Abdel Moneim, and I hope I got that pretty close.
Perfectly.
Khalid is the CEO of Alupco, and here today at Cityscape Global 2025, some big news. Maybe start off, tell us a little bit about the company, and I want to get to this breaking news.
First, thank you for having me. It's our pleasure. Alupco is a Saudi company. We have been here in the market for 50 years. This year is our 50th. So,
congratulations, happy anniversary.
Thank you very much. It started actually with aluminum extrusion, and we became one of the top 10 worldwide. 50% of our business is in Saudi Arabia, and the other 50% is another 26 countries. Actually, we go up to North America, the US and Canada, and we also supply the other side till India. So widely available. 5 years ago, we started the diversification journey where we introduced most of the other products that the construction clients requires. So steel work, light, decorations, wood, what have you, that makes our clients have a one-stop shop scenario. And instead of looking to too many suppliers, they deal with us, we give them a worry-free or hassle-free journey with the construction journey.
Well, I alluded to it a little bit earlier, a big announcement. Alu House, talk about more business, maybe talk about that big announcement today.
Yeah, actually, through the journey, we look at the construction market, we analyze where is the bottleneck, and then we create a solution for that bottleneck. So instead of being a raw material supplier, we are a solution provider. When we look at the Saudi Arabia market, we found that the bottleneck in supplying more houses to the market. So there is requirement of houses, but the supply chain today has lots of bottlenecks around because of the requirement of human resources, the requirement of material, the site work, the aggressiveness of the site during summer. So we came up with automation of this industry. And instead of building at site, we build at factory. So we converted the construction industry from traditional to like a car industry-like, by which we do we divide the house into 18 modules. We produce the modules in the factory. We finalize, finish all of them, and we transport, and then we collect them together as a Lego. So this will actually improve the quality significantly and will be much faster because the site work will be only 1 week.
Wow.
Yeah, so 1 week you will receive the house. So this is beautiful, definitely. There is some work in the site, in the manufacturing site, but this is on us because we understand manufacturing. The beauty, every time we start, we don't start from scratch. We partner with a global partner. So we have actually from the US, we are partner with Array Technologies, which is NASDAQ listed. We're partner with Matrix Applied, which is NASDAQ also listed company, into joint venture in Saudi Arabia market to bring solutions. This time we went to the other side. We partner with Alu House from China because they are actually one of the fastest automation process. And we're creating a company in Saudi Arabia. The capital is $500 million US to build a factory in Riyadh that will supply around 1,000 to 1,500 houses per year.
Excellent. Well, Khalid, thank you so much for joining us today. We appreciate you sharing all your perspective and experience with us today.
Thank you very much. It's my pleasure. Thank you.
Thank you.
Thank you.
Let's do it, one and all. Welcome back to the broadcast. You're watching Taking Stock live from the trading floor of the New York Stock Exchange. Time now at this hour for a few fintech, crypto, and AI-related headlines you need for your Friday. First up, the crypto majors, Bitcoin, ETH, Solana continuing to slide multiple percentage points today. Bitcoin earlier in the day reaching a fresh low of 80,537, its lowest level since April 11th, though it has rebounded a fair bit since then. Bitcoin now down nearly a quarter this month, its sharpest drop since the 2022 meltdown. Mass liquidations, forced selling, extreme fear gripped the crypto market. All this as crypto treasury firms have seen their combined market value plunge from $176 billion to $99 billion as the broader market unwinds from its peaks in October. Who better to chat with now than our good friend John D'Agostino. He is head of strategy at Coinbase Institutional, here to help us all get a bit smarter and maybe assuage some of my concerns about what's going on for the crypto majors. My man, welcome back to the broadcast.
Thank you so much for having me, JD.
So put our mind at ease for everyone who's seen the Bitcoin price action this week and they're saying, uh-oh, what's going on? What are you seeing in price action?
Well, let's start with the facts. Things are bad. Things are scary. I get it. I'm very sympathetic to anyone who's come into the market recently. This is about my 9th apocalypse, so I have the luxury of having a little bit of perspective. What we tend to see in these 3 or 4 year cycles, in Bitcoin specifically, is a gap down, a correction around where we are now. Now, historically, although history is no indicator of future performance, we've seen significant upside following those trends. But pessimism is, we are in a state of, we've heard of irrational exuberance, we are in a state of irrational pessimism right now. So we started off on October 10th. October 10th was a gap down deleveraging event. And by deleveraging, what we mean is prices fell quickly. Anyone who was levered missed their margin calls, didn't have the money to make their margin calls. They were too levered. Then they started taking open interest away from the market. That caused order books to shrink. That creates a panic effect. Momentum traders kick in. We started getting positive economic news, good employment number. I'm sorry, worse inflation numbers, in the sense of the probability of a rate cut in December shrunk. We had the AI sell-off, so we had this perfect storm from October until, quite frankly, very recently. In the last 24 hours, we've now seen an indication that rate cuts are back on the table for December, which is perhaps why we saw that rally up from that low today.
How are you approaching the general seasonality conversation for the crypto majors? We've heard typically this can be a very strong time of year, not just for equities, but for the crypto giants as well. What would be your expectations for how we finish off this last trading week of November into the final month of the year?
So I've been very consistent with you, JD. On bull markets, I don't try to pretend to predict prices. I'm not going to try to pretend to pick on bear markets. What I will say is, in these situations, these irrationally pessimistic situations, the market's looking for peak capitulation. And that's somewhat a qualitative measure. It's hard to figure out. I mean, it feels that way. If you're on crypto Twitter, it just feels like you cannot get any more pessimistic. Had a very, very smart trader friend of mine point out recently that since that 2022 meltdown, every time we've seen the dreaded death cross in Bitcoin and Ethereum, that's when the 50-day moving average drops below the 200-day moving average. Ironically, that macabre sign has indicated the bottom. We're seeing that now. In addition, we're starting to see open interest on the CME and Coinbase futures markets stabilize. What that means is that fleeing of liquidity, at least on the future side, seems to have stopped. Those are two good signs, plus the increase in probability of December rate cut. So I am optimistic of, if not a Merry Christmas, at least not a horrible Christmas.
I've got less than a minute left. Give me your outlook and your expectations for what the new year may bring, and kind of how you're approaching general price action as we soon enough turn the page to 2026.
My advice is always the same on up markets or down markets. Stay calm, dollar cost average in. If you like apples, you don't dislike them when they're on sale. If you don't like apples, now's your time to gloat. But I'm confident.
You like apples, I could tell.
I love apples.
John D'Agostino, big fan of apples, big fan of crypto as well. He is the head of strategy at Coinbase Institutional. Thanks for being here as always.
Thank you.
We'll do it again soon. A very happy Thanksgiving to you. Folks, don't go anywhere. The latest on startups, raises, and rounds, plus an interview with Omar Azar of Matter Labs. Much more Taking Stock coming up after this. Welcome back to the broadcast. Today in the world of startups, raises, and rounds. First up, Kalshi landing a $1 billion funding round that doubles its valuation to $11 billion amid surging prediction market momentum. Next up at this hour, Function Health raising nearly $300 million to build its doctor-trained medical intelligence AI. And finally, for news you could use on this Friday, Hello Trade pulling in more than $4.5 million to build a mobile-first blockchain platform set to provide access to U.S. stocks to investors all around the world. Joining me here now on the trading floor of the New York Stock Exchange is Omar Azar. He is the Vice President of Business Development at Matter Labs, the man himself down here on the trading floor. Happy Friday. Thanks for being here.
Happy Friday to you too, JD. Thanks for having me.
Can you start first and foremost, give our viewers a bit of an introduction to your work at Matter Labs, and why does real on-chain privacy, what does it look like for enterprise? I know that's crucial to the work you're doing.
Yeah, so the work that we're doing is we're essentially helping enterprise institutions, banks, central banks, governments finally start to come on chain, specifically start building on top of Ethereum on their own terms, really, through their own private layer 2s.
ZK Sync, biggest edge for institutional change, and give our viewers an introduction for what that is as a core focus of yours.
So ZK Sync is a layer 2 blockchain technology, and what we have essentially is we're building the Ethereum bank stack. Any bank, any institution can finally start building. What they really require, though, is privacy, scalability, and verifiability. And so we're giving them finally the optionality of building on top of Ethereum, building on chain, all the tokenization, tokenized deposits. They can finally start building that with the privacy and the compliance that they actually require. That's pretty much a non-negotiable that has not really existed before until very recently.
Talk to me a bit more about that recent technology. You talk layer 1 down here, layer 2 right on top. How do you visualize the new layer 2 sort of revolution, and what most excites you about what layer 2 can do?
Well, one, the nice part about it, okay, so you have full compliance, you have full auditability, you have pretty much building completely in your own environment, you control everything you want to do, but on top of that, you have the ability to actually interact with the broader public markets. Previously, if you wanted to build in privacy on blockchain, you were in an isolated environment, but now you can finally come onto the largest capital markets in the blockchain world, which is on Ethereum. You can build in full privacy, everything you control, who can transact, whatever. But you can now be interconnected with all the DeFi markets on Ethereum. You can connect to Aave, you can have access to liquidity without really losing the non-negotiables that any bank or institution really needs.
Talk to me about what Atlas is for anyone watching the interview who might be unfamiliar as to why that's such a big focus of yours, and what would you say is the headline benefit of Atlas?
Atlas, in a really short way of saying it, is kind of like the broadband moment for blockchain, specifically building in the public markets. It really brings down the cost significantly. Now we're talking about internet scale, layer 2 blockchain technology you can build. There's no real limitations, but once again, what we're really excited about is the interconnectivity with Ethereum and the broader public markets it finally brings. And now it's pretty much at the fingertips of any institution. It's fully live. Anyone can come on and start building private blockchains, whether you're a bank, central bank, any type of financial institution, or you could even just be a startup and you want to build, hey, I want to build a fully private application, let anyone come on chain, but I also want to access and tap into the liquidity that's on Ethereum. I don't want to be isolated.
Is it your expectation we'll see even more on-chain adoption for 2026, and what else is on your horizon for the new year, which will be here before we know it?
Oh, okay. I think for 2026, tokenized deposits will be just as big as stablecoins, by far. Every week we are in discussions with a brand new bank that wants to talk about tokenized deposits. Every single bank is going to have a tokenized deposit strategy, and you're going to start seeing that accelerate in 2026. Honestly, if you take a time series the last 3 or 4 years, and you just put every single news article that has been a bank talking about tokenized deposits, you will see that it is accelerating into a massive blob. I mean, every other week it's another major bank like HSBC, JP Morgan, Citi, Deutsche Bank. Everyone is now coming on chain, and they're starting with tokenized deposits, because now you fully, when you put deposits on chain, banks now have money to start actually acting in DeFi.
Omar Azar is the VP of Business Development at Matter Labs. You're going to be the first person I officially say happy holidays to you, because as you were talking, we got the Christmas and holiday lights going up here at the Virtu Financial Desk, which means I guess the holidays are here. My man, thanks for being here on the broadcast.
Thank you for having me. Happy holidays to you too.
Absolutely, folks. Don't go anywhere. Much more Taking Stock coming up right after this.
Welcome back. I'm Scarlett Sieber with Money 2020, and on this segment of how fintech companies actually make money, we're going to be breaking down Navan, the company that turned corporate travel from a soul-crushing spreadsheet into a slick fintech experience. Remember when business travel meant begging for an approval code, losing receipts in your backpack, and then spending hours trying to expense a $6 airport coffee? It has happened to me more than once. Yeah, that is some trauma. Then someone finally said, what if this whole thing that most people avoid like the plague, what if this thing made money? Enter Navan, the artist formerly known as TripActions, a company that looked at your boss's Amex statement and said, let's turn this into a fintech fairy tale. Picture it, it's 2015 Palo Alto. Two founders, Ariel Cohen and Elon Twig, are watching their co-workers wrestle with SAP Concur, and it's a CrossFit workout. They're fed up, and what do fed up founders do? You know the answer, they build. So they launched TripActions, basically Expedia for corporate travel, except your company foots the bill. VCs go wild because it is 2018 and anything with the word platform and a clean sans serif logo got a term sheet back then. But wait, it's not just about booking flights. Navan didn't just stop at travel. They built a fintech stack that sits right between your company's wallet and your next very important business meeting, aka a conference that probably has bottomless mimosas. So how does fintech and how does Navan actually make money? Booking fees. Every time you click confirm on that flight to Chicago, Navan takes a cut. It's like Ticketmaster, but for your boss's budget. Number two, Navan card revenue. Swipe the Navan card for hotels, meals, or that suspiciously expensive dinner with clients. They earn a slice of every dollar of that. It is corporate cash back for them. SaaS subscriptions. Companies pay monthly to use Navan's platform. Why? Because it makes the CFO's blood pressure drop by 12%. That is definitely worth a subscription fee. Also, expense management tools. Navan bundles travel, payments, and expenses into one dashboard. Suddenly, what used to be an admin work became fintech revenue. It's giving Notion for finance vibes. The actual travel agency status. Unlike competitors who slap a pretty UI on top of someone else's travel engine, Navan is a legit travel agency. That means better margins, better control, and overall just better vibes. The IPO moment. So fast forward just to last month. Navan IPOs, valued at around $6 billion, they raised $923 million. Impressive? Yes. Down from their private valuation of $9 billion? Also yes. But hey, it is all about the liquidity event, not the price, right? Wall Street loves a redemption arc. Navan's IPO says fintech isn't dead. It just put on a blazer and started expensing Uber Black rides again. This isn't just about one company. It is a signal to the market. The first wave of fintechs went after consumers. The second wave, like Navan, is quietly going after the back office, the unsexy stuff that actually moves money. If Navan can make finance cool inside the expense department, imagine what's next. Maybe procurement, payroll, compliance, the final frontier of fintech boredom. Because of course, boring makes billions. We know that here. All right, with that, it is back over to you.
Welcome back to the show. A quick recap of price action here on Wall Street for this Friday. The S&P 500 and the Dow both finishing up a full percent. The small caps up 2.8%. Next week here on Wall Street, it is a shortened one for the holiday season. Monday, we'll hear from Zoom. Tuesday, earnings from Alibaba and Dell. Wednesday, John Deere. Thursday, enjoy your turkey and your football. That's going to do it for Taking Stock. We'll be back on Monday with a whole new show. Enjoy your weekend, and we will see you then. Woo!